Hello and welcome to AgDealerTV. I'm your host again this week, Scott Garvey. Well, with all this snow and cold weather that we've been putting up with here on the prairies for weeks on end, wouldn't it be nice to be somewhere warm, like, say, Miami Beach? Well, if you were a senior executive from CNH Industrial, that's the parent company of brands like Case IH and New Holland, that's exactly where you were at the end of February. And the reason they were there is because the company wanted to meet with financial investors and those in the financial industry to talk about what the company's plans were for the future. And a big part of the reason they wanted to do that is because as of January 1st, CNH Industrial looks a lot different than it used to. Some of the brands under the CNH umbrella, specifically the on-road brands like Iveco Trucks and Fiat Powertrain Technologies, have been splintered off. That leaves the new, smaller CNH Industrial with a strictly agriculture and construction equipment focus. So executives wanted to talk to the financial sector and tell them just what they had in store for the new, smaller, more focused company.
The residents of Miami Beach, Florida might not be used to seeing farm machinery being moved through their resort city very often, but when CNH Industrial decided to hold their Capital Markets Day in that city's Fillmore Auditorium, they hauled in several pieces of equipment to park in front of it, just to add a little flavor to the event. CNH invited a range of people from the financial sector to attend that in-person event at the Fillmore. It was also live streamed online, where senior executives spelled out their strategy for leading the new, smaller and more focused organization into the future. With just ag and construction machinery now in the company's holdings, CEO Scott Wine told the attendees that the company would be making aggressive moves to gain more market share and grow both the New Holland and Case IH brands. And he revealed he has a new 3-year plan to accomplish just that. Wine's plan includes becoming what he called a more customer-focused organization. That means listening more closely to what buyers want. And as a smaller organization, he thinks CNH is now better poised to do that because its reduced size and sharper focus makes it more agile, so it can more quickly adapt to consumer demands. Wine said he plans on increasing net sales to between 20 and 22 billion US dollars by the end of the 3 years, and he also wants the company's gross profit margin to hit 24%. He added that the company will be putting more of that extra cash into increasing its R&D. He believes the brands have some ground to make up when it comes to precision technology, and it's that segment, he thinks, that will be key to future profitability and growth in both ag and construction. Wine says that's why the company recently spent US $2.2 billion to acquire Raven Technologies. He said that when he's been out meeting with dealers and customers, many of them have said they like the iron the company builds, but they wish it could be backed up with better technology. He intends to grant their wish sooner rather than later. Another area the company will focus on is quality control. Quote, "We've got to get improvements in quality," end quote, he told the crowd. Derek Nielsen, CNH's president of agriculture, also took the stage at that event and told the crowd to expect to see an incredible 150 new product launches over the next 3 years, adding he thinks each of those new machines will bring additional value to farmers, dealers, and ultimately, of course, to the company itself. Celine Tour, the Vice President of Advanced Technologies and Innovation, said customers are the driving force behind the development of electric and alternative fuel drives the company is currently working on for its powered equipment. She added many customers have told the company they would like to reduce their carbon footprint, and alternative drive systems will be important in helping them do that. Expect to see the company invest in helping its dealers upgrade too, but don't expect to see the company cut sales prices on its machines to grab a bigger chunk of the equipment market. Instead, due to the high demand for machinery, It expects it will not be offering any price incentives to buyers in the near future. So expect to pay full retail for red and blue equipment in the coming years.
Well, one of the things Scott Wine said when he was talking about the future and what advantages and possible disadvantages there might be financially for the company, one of the things he mentioned was geopolitical instability. And unfortunately, barely 2 days after that conference was over, Russia attacked Ukraine. And geopolitical instability might be an understatement for what we're facing in the future. So it's been a bit hard to focus solely on financials for equipment brands. So what I wanted to finish up with by saying was the hardship that's being experienced in the Ukraine right now is something unimaginable to most of us. And I'm going to ask you to do something that we've done ourselves. We've contributed to the International Red Cross's fund to help Ukraine and its people. A lot of other individuals and even corporations have done that too. I'm asking you to do the same. We can just hope for a quick, best possible outcome for that region of the world. Thanks for watching.